Good afternoon, ladies and gentlemen, and welcome to the BLACKBIRD PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your text at the bottom and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand over to Ian McDonough, CEO, and Steve White, CFO at BLACKBIRD. Good afternoon, guys.
Good afternoon, Mark. Good afternoon, ladies and gentlemen. Nice to be here. So my name is Ian McDonough. I'm the CEO of BLACKBIRD PLC. I'm going to be presenting today with Stephen White, who's the COO and CFO of our company. We also have Stephen Streeter on the line, who will be present during the Q&A. Right, so I'm going to kick off. I'm going to go to our third slide and just explain for those people that are not aware who we are and what we do. We are, of course, an AIM-listed business. We are BLACKBIRD PLC. On the 1st of September, although I think things are moving around a bit on the market, we were valued at around £67 million market cap. We are, at our very heart, an IP company. And by that, I mean that we hold our own patents for our own technology. We have two key parts of our technology that are under patent. One is our video codec, a codec standing for compression and decompression, which is how video is watched anywhere. Now our codec is unique in the sense that it is able to be watched on the internet, but also frame accurately edited on the internet. The way that the codec is designed and architected allows that, and that is unique. Nobody else has that. The second part of our technology is our editing suites that are available in JavaScript, and JavaScript implies that it means that it is all available purely in a web browser. The fact that our tool sets are completely available in JavaScript is really key to our scaling strategy. It allows our product to be scaled very easily with no configuration, no installation, no download, merely providing end users with a username and a login for them to access the tool sets and the video within their normal computer. So it's available on any computer, any laptop at a very low bandwidth. Now, many of you will have heard all that before. One item that we're adding to our messaging now going forward, especially given the current climate as we come out of the COVID crisis, was emerged slowly from the COVID crisis, is why and how BLACKBIRD was conceived at the very first place. And it was always conceived around offering end users the freedom to operate free of location, free of proprietary systems and technology and hardware, and free, in many cases, of much of the Earth's resource. And that is attractive not just to the end user, who is now, as we come out of this crisis, looking for a more flexible approach to their working conditions and their lifestyle, but also to the companies that employ them, who are looking for a resilience in case there should be another COVID crisis or another type of pandemic that arrives, or indeed any other kind of crisis that arrives. They want to have that resilience within their companies, and so that's something that we're adding to the messaging that we find is really hitting home. Now, the board are comprised of 7 people: myself and Steve, who are on the call today, and Stephen, who's going to be there during Q&A. We are all investors in the business in various ways. My family and I hold around 7.2% of the stock, and very happy holders. Stephen Streeter is just over 18% of the stock, and everybody else invests when and where they can. John Honeycutt has not yet become an investor, actually, but he's the newest member of our board. John joined us just a couple of months ago. He is a titan within the media technology side of our business. He was the CTO at Discovery Networks globally for 15 years. And during his time at Discovery, he was responsible for taking Discovery's infrastructure into the cloud. And for that we mean the storage and the playout particularly. John then left Discovery and was taken on by Google Cloud. Was actually a real coup for Google Cloud to get John. and John designed the go-to-market strategy for the Google Cloud Media Platform. And since then, he's taking some time out of the traffic, taking a sabbatical. But I saw an opportunity to bring John on board because I know what a supporter he was when he was at Google, and he was absolutely delighted to join the Blackbird board. John is indeed a visionary in the industry. He knows, he sees where this industry is going as far as cloud migration is concerned, and he believes too also that Blackbird has seen the future and is providing the infrastructure around that. So it's a real coup to have him on board. It doesn't harm at all that John is also a US citizen. He's based in Boston and gives us some real credibility on that side of the Atlantic. So we are part of the video story. Video has been growing at a 32% CAGR since 2012 in terms of consumption on the internet. I'm not going to go through all of these stats on this slide, but the one on the final column there, about 82% of all internet traffic is video. This is actually a forecast by Cisco for 2022. When indeed, if this comes true in 2022, that will be 15 times the size of the internet traffic in 2017. There is a huge amount of growth going on around video consumption. What it means to us as an online video platform, editing platform, is that there is a plethora of new video creators in the market that do not have decades of fixed hardware in their back offices that they've got to sweat and amortize. What they're looking for is a state-of-the-art SaaS-based solution that they can spin up with minimal capex outlay and have it updated all the way through their subscription, so they don't have to wait for another hardware purchase to update their release. This is the way that the market is going in general, and we are very much part of the video story, but also the SaaS story. So COVID-19 has had quite an impact on our business, both positive and negative. Negative in the sense that, well, our core market was sport, live sport, and that of course ceased. But what we've seen in its place is the fact that over the last few months, Satya Nadella, who's the CEO of Microsoft, has said that there's been 2 years of digital transformation happened within 2 months. And we absolutely believe that. There's been a huge inflection point in terms of migration to the cloud. And so our results do reflect that, in the sense that we've managed to grow our top line significantly, even though the core market fell away. The other thing that we've seen is there's been a few phases of this COVID crisis. There was the initial shock phase that was followed pretty much by a desperation to keep the lights on, as people were not allowed to travel or go to the office or access their equipment. And we were brought in by a number of companies to really help with that. But what we're seeing now is a phase that is much more about resilience going forward. It's much more about how do we make sure this doesn't happen to us again, and put in the infrastructure to prevent that, as well as also offering end users the work-life balance that they are craving, and giving them flexible working and lifestyle conditions. So that is where we are today in the crisis, and most of the conversations we have today are much more long term and positive around that. Now, when I joined the company 3 years ago, we identified what the key USPs were of our platform, and these are the key USPs of Blackbird in an editing environment. Now, the first three icons here, what we talked about for the first 2 or so years I was here, up until about 6 months ago. We really talked about how fast we are. We are the fastest video editor in the world. And an anecdote around that is that the NRL, National Rugby League in Australia, asked us if we can get content to market, so a try being scored in Sydney or Perth or Brisbane, to market within a minute, and we've managed it within 30 seconds. No one else can do that. We have a very scalable proposition. When you add a new user to the Blackbird platform, you're just adding a laptop and an internet connection. That's all you're adding. When you add it to one of our competitors, let's say a traditional on-premise provider that's got a very heavy infrastructure that's been moved to the cloud, what you'll have to add is a number of things. A very powerful computer with a GPU. You'd need to add a Teradici subscription. That's another piece of software that allows that computer to be connected to the cloud. You'd need to add a 50 or so megabit bandwidth connection to that computer. You need to have considerable storage on premise in locally, and also considerable storage in the cloud. So it's a 5 times cost advantage to anyone that's scaling up within a media company to use Blackbird. In terms of quality, we have a fully stacked tool set, all in the browser, as I've said, and we also have the ability to publish directly from source. In 4K into the platform, it is 4K that's coming out. There's no degradation of the quality. But what everybody's wanted to talk about for the last 6 months has been remote editing and remote production. Now, remote production until 6 months ago really meant, well, I don't want to send a plane load of people to Japan or to Brazil to cover a major event. I want to do it all from our home base here in the UK or in the US. And so you would have a lot of people going to a central office or studio and create content from there remotely. What it has meant since then is that not only is it just odd events that are being created, people are producing content on a constant basis remotely, and they're doing that not from their home base. They're doing it from their living rooms or from their bedrooms or their studies. They're doing it from their homes, and they're not doing it just a one-off group. They're doing it across their entire editing base. So it changes the scale, and it changes the hardware and the infrastructure demands completely, fundamentally, which is where we play very, very well, because we don't have any demands on hardware and we have very little demands on internet infrastructure. So that's where Blackbird really shines. So if you've joined this webinar before, and we did it last time, you might be familiar with this slide. It shows our strategic direction. And when I first joined the company 3 years ago, we used to have a different ball on here on the far left, which was around broadcast post. We've moved away from broadcast post as a production, as a business model, but we've moved that into a different area of the business, which we've talked about before, the partnership program. But if you move left to right across the slide here, what the infrastructure deals are those ones that are now basically in live content. They're generally in annual or multi-year SaaS deals direct with customers. So think of those as the direct deals that we've got. The scale of those deals are something between 5 and 6 figures, depending on the execution. And we have quite a number that I'll show you on the next slide. Now, where the core part of our focus is at the moment strategically is not doing direct deals, but working through partners in an OEM model. OEM stands for Original Equipment Manufacturer, and it means that my sales team can be multiplied many times over in terms of scale. We have the ability to be part of a technology stack, which is usually an end-to-end solution. That simplifies the sales process for the company buying the product, and it also speeds up the sales cycle, because it means that we're contracted through a larger third party that already has a legal relationship with a contractual relationship with the end customer. Now, we've made a lot of progress on this in the last period, and over the last week or so, we've announced our partnership with Tata Communications. I just want to explain and give some stats about Tata and where they fit in terms of the ecosystem. Tata are one of the world's largest telcos. They're a $250 billion market cap company. They have presence in over 200 countries around the world. They service 300 of the Fortune 500 companies. And I think what's really most important, particularly in the media and entertainment sector, is they own 30% of the internet. So no exaggeration, they own 30% of the physical infrastructure of the internet. That's the fiber particularly. So much of the internet volume that you see going through your own home internet has touched Tata technology at some point, vast majority. Now, if you come specifically then down to what it means for Blackbird, they have a video product called Video Connect, which is basically a network product and processing product that has 400 customers around the world, 400 media and sports customers, broadcasters around the world. Blackbird is their editor of choice. Blackbird has been integrated into the Video Connect product. We have announced our first contract, our first deal with Tata multi-year deal. I'm not allowed to say who it is at this stage, but it is a multi-year deal. This, I think, shows the ambition and the potential of where we can go with the OEM strategy. At the end of the day, we are a technology company. We're a software. Our software can be multiplied, duplicated 1 billion times over. It doesn't cost us, the marginal cost is negligible. And that is where we are positioning our business. We want to be part of an OEM model where we have a third-party sales force taking Blackbird out on the road, on the street, part of their products, seamlessly integrated, and take that, take cloud editing globally to be the standard. So that's a little bit of news on where we are with Tata and with OEM. Now, looking forward 12 to 18 months, we see there's another bunch of companies that are very aggressive in this sector, and they are the public cloud companies. Where we see them selling us is that they will be investing in being the end-to-end solution for pretty much every media and entertainment broadcaster around the world. That's the ambition. For those companies to sell us seamlessly, frictionlessly, we need to be fully integrated natively into their public cloud infrastructure, and that will involve a replication of our cloud into their clouds. What we've announced in our RNS on Monday is that we have now a public cloud prototype, and over the next 12 months we're moving that into a product, so that there is a seamless ability for the sales teams within the public cloud infrastructure to sell Blackbird as part of their suite. The end experience, by the way, to the user is not much different than it is today, but it does allow for the business models to be more frictionless. Okay, so as you remember on the previous slide, the smallest ball here was the infrastructure ball. Well, this is a selection of the deals that we've closed in the last 6 months around infrastructure. I'm not going to dwell too much on this. This is really about making sure that we raise the profile and bring on some of the highest profile customers, in the business. As you can see, there's a good selection of US customers here with A&E, Riot, Venn, NHL. A good selection of sports customers, and also a news customer as well. Really, just to make the point that this is really in our sweet spot of where Blackbird is an end-to-end tool. Is a tool that can take live streams in and publish, most importantly, distribute streams out. So that's really key. On this slide, though, this slide is where we expect the vast majority of our scale to come from. So forgive the golfing expression, it's the direct deals for show and the OEM deals for dough. This is we've got some comparables here to show you in terms of where we see some businesses going. So Town News, for instance, Town News came to us in 2018. We started off with 3 local TV US news stations with them. By 2020 September, we have got 51 local US news stations. So it just gives an idea of how an OEM can scale very quickly. Zixi is a technology that we've integrated with. Zixi gets us right to the very heart of the action for some of the largest broadcasters in the world. It saves us going through all the explanations of what Blackbird does and how Blackbird fits in. Zixi takes us right to the people that actually need us. We don't have a deal to show for our Zixi integration just yet, but watch this space. LiveX have got us into the US Democratic National Convention, which they say we're the only people that could have executed. Obviously, the Democratic National Convention this year was one of the highest profile events of the year. It was completely virtual, and we were selected by LiveX to execute that. Now, the big kahuna for us on this page, of course, is Tata, and we see Tata as being a very valuable partner for us going forward. We are going to be talking to, obviously, their existing partners, their existing customers, the 400 base I just mentioned, and of course, anybody new that they're talking to. We are their editor of choice. The deal size, though, within the Tata relationship is going to be something between the $50,000 to $150,000 per year mark. That is a deal size that we can comfortably execute in terms of minimal professional services and support. Well, actually, support is actually done by Tata. They're doing all first line support, but it's easily replicable. These deals are very replicable, so we can sell many with as little drain on resources as possible, and that is why that's the key size of the deal that we'll be aiming for. Okay, I'm going to pass over to Steve, who's going to take you through some of the numbers for the last few months.
Thank you, Ian. Good afternoon, everyone. So our strategic focus on direct infrastructure deals and OEM deals is really starting to bear fruit. So in the 6-month period to the end of June this year, revenue was up 49% year on year to 714,000. But this is really just the start of our journey. As Ian mentioned, we've just brought on board Tata, and we're in a number of exciting conversations with other OEM providers. North America has always been a key market for us because they are trailblazers in terms of migration to the cloud. And I'm pleased to say that in the period, we were up 243% year on year in terms of revenue, showing the promise. What we've seen from COVID really is a shortening of sales cycles, which is great news because, as most of you are aware, technology sales have tended to be quite long. But on the flip side, we've after talking to a few customers, we have seen in a number of instances some risk mitigation because customers, in these uncertain times, don't want to commit to multi-year deals. Moving over to the right-hand side of the page, that's a reflection of our future order book. So as at the end of June, this figure was 1.86 million, which is up 54% year on year. It was roughly in line with our year-end figure at the end of 2019, mainly for the reasons that I gave you in terms of, there are a few customers I would like to have seen, do multi-year deals, have just been risk managing, and so those deal lengths have been shorter. I'm pleased to say that by the end of August, we'd grown that figure to 2 million. By the end of August as well, we'd also secured 1.5 million of revenue for 2020. That was up 54% year on year. And actually, that figure itself is up 35% compared to the 2019 revenues that we booked. And obviously, we have a few months of this year to continue to grow that figure. Our strategy is very much to do multi-year deals, so we get to a high annual recurring revenue figure going forwards. And again, I'm pleased to say that for 2021, we've already secured 750,000 of revenue, which is up 63% compared to the comparable figure last year. Our cost base has been fairly static during the period. We've actually made some savings on not attending trade shows and the travel associated with that. And Ian would talk to you a bit more about the great marketing activity that we've done very cost effectively in the first 6 months of this year. We have a very high gross margin. It's good to remind you of, you can see that it was 90% for the 6-month period to the end of June. So the revenue growth that we've seen has fallen to the bottom line. I would expect, as we indicated at the year end and the time of doing a placing, we have brought on board some additional staff members to make sure that we're operationally resilient going forward. So I'd expect the cost base to be slightly higher in half two. But, the overall trend, is very much that the cash burn is coming down, which is great news. A reminder, we have a very strong balance sheet. We have no debt. As at the end of June, we had just under 7.2 million of cash in the bank. Again, just like to reiterate what we said earlier in the year, in that, with our core strategy, we see those resources being enough to take us to a break-even position.
Thank you, Steve. Okay, so ladies and gentlemen, this slide is really to talk about the recognition and profile that's been built over the last few months. Just as a quick reminder before we start, this brand is only about 2 years old. I know the company's been around for a while, but since I joined, I completely rebranded everything and relaunched the strategy. And therefore, as far as the market is concerned, at large, this is a brand new brand. So this last period, we've been nominated and won a hatful of awards, some of them listed here. Probably key to this slide, though, is that, as Steve said, we've not been able to travel to trade shows. During any normal 12-month period, we would travel to a number of trade shows around the country and the odd one in the US and across Europe. At quite a lot of expense, it has to be said. This year, it's all gone online. During a normal year, we'd probably meet 500 people at these trade shows in total. This year, we've presented directly to over 1,200 professionals in the industry, and that's been ourselves. We've done it directly, but we also done it in conjunction with Amazon Web Services, with Microsoft Azure, with Zixi. Next month, we have one with Google. And we'll also be presenting with Tata, and then we'll also be presenting with a whole host of other partners we have not yet announced. And on that point particularly, our unique position in the market, being able to offer a high professional grade of video editing at extremely low resources and extremely low bandwidth, has made us very popular. A lot of people want to partner with us, and it's up to us now to make sure that we pick the most strategic people. The criteria on which we judge those people and whether we want to be partners with them is really about how easy it is to integrate with them, and obviously we pick the ones that are, if they make sure they're quite easy to integrate with. Second, have they got a great brand name? Are they indeed have they got a great customer base? And the most important one for me is, do they have a real incentive to sell Blackbird alongside their product in the fact that it actually enhances their product a great deal? And that definitely is where Tata fall into it. The ability for Blackbird to add editing while all content for Tata is within their infrastructure adds a huge amount of value for Tata's end customers. It saves Tata's end customers a lot of time, and it saves them a lot of money having to shift content out of a system into another system to edit it and then back into that system. So, we're adding a huge amount of value there, and that's what we look for in terms of partners going forward. We've also had some very strong reviews in industry journals, and that's very important to get that credibility. So whether it be sports journals or technology journals or media journals, we've been covered a lot this year, and rightly so, very, very positively. And with that, the customers that we bring on board have also been able to speak about us very enthusiastically. I think the fact that a lot of the customers are now American means that the enthusiasm is even higher. So Blackbird is simply awesome and the only show in town, etc. So we're delighted to have our new customers come aboard and be able to really be great advocates for us as a challenger brand in the market. And I think it's it's really, really helpful for us. What we have done as well over the past period is flesh out our ESG credentials, the environment, social, and governance part of our portfolio, and that's really because it's very important to a lot of our customers and a number of our investors that we have this in our mind. We have shown this or a similar slide to this before when we talked about the environmental savings and positive impacts that we make, and that's because we obviously encourage a lot less travel because everything is done remotely. Because of the way we are architected around the Blackbird codec, it means that a huge amount of high res, heavy duty content is not having to be moved around. So it saves a lot of energy. We're just moving the Blackbird codec around and publishing only that content that needs to be published. So it saves a lot of bandwidth, a lot of egress and ingress in and out of the cloud. And of course, because it can be used on any laptop on low bandwidth, that means there's a lot of hardware. No bespoke hardware needs to be manufactured to operate Blackbird. In terms of social, well, we've really proven over the last few months that we've enabled operational resilience for our customers and really helped them push through these difficult times. And more positively, we've actually supported flexible working and lifestyles for their staff and their end users. In terms of governance, we are SOC 2 Type 1 accredited. This is a very prestigious security accreditation and ticks a lot of boxes for those big companies like Tata and the big US customers that we have, to give them peace of mind in terms of the diligence that we put into our own security. We've also adopted the QCA code, which gives a degree of comfort as well. So final slide from me. In conclusion, we are a well-capitalized business. We have enough money in the bank to see ourselves through to break even. Through bringing on Tata and others, and more to come, on the OEM side, we are really delivering on the OEM strategy that we've talked about. Even through this crisis where our core market actually almost disappeared, we've seen sales acceleration, which is just the beginning. This is just the beginning of the inflection point for us. And on a macro level, where we've seen resilience and flexible working becoming part of the norm, we are there to power content creation freedom and lead on that story, not just be part of that story, but lead on that story. So thank you, ladies and gentlemen. That's the end of our presentation.
Thank you very much, Ian. Thank you, Steve, very much indeed. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the company take a few minutes just to review investor questions submitted today, and before we launch into the pre-submitted questions, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. And lastly, before we hand back to the Blackbird team, I'd like to remind you that your feedback is very important to the company. And immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can understand your views and expectations, and we would very much encourage that. I guess before Ian, Steve, before we look at the questions that are coming in currently, investors had the opportunity to pre-submit questions, and you had a great number of those submitted. So I guess what we'll look to do is perhaps theme some of those and then present them to you. But just to reassure all investors that the company review all questions and publish responses where it's appropriate to do so. So perhaps I could start with this question. Within issues of security around TikTok, has there been any interest from the likes of Microsoft in licensing our technology behind EVA, your video social network app?
So, consumer proposition is not part of our core strategy, and although we have some technology, we believe that the real value of TikTok is in the fact that it has millions of users rather than any technology that's prevalent within. So it's not part of our core strategy at this stage, and no, we haven't been approached by Microsoft or anybody else about it.
Thank you. I guess you've answered this, but just for clarity, have we got a new revised timetable for the OEM deal?
Well, I think this question might have been submitted sometime ago.
Yeah.
So we have got a revised
yeah.
timetable, and I think we talked about it a lot in this presentation. So yeah.
Perfect. Have any clients decided not to renew contracts with Blackbird, and for what reasons?
Well, we have a very high retention rate. We have a retention rate above 90%. And there are sometimes those where we don't currently fit into the ecosystem for whatever reason, but I would think that a 90% retention rate as we go onto annual SaaS contracts is pretty good.
Yeah, just to add to that, really, we've probably seen a low 5-figure loss in revenue in H2 2020 compared to H1 2019 as we shift away from project focused onto our direct infrastructure and OEM strategy. So it's not been a material amount.
Thank you very much. The next one, what do you estimate to be the addressable market size for the Blackbird product suite?
So it's going to give you a big number here. So purely video editing is around a $1 billion market, $1 billion per year market. Video distribution is around a $17 billion per year market. So we have a foot in both of those camps. We allow our customers to edit and publish from our platform. And so somewhere between 1 billion and 17 billion.
Yeah, worth reiterating on that as well. On the editing side, there's only really 2 big players. So, there is scope for another big player there. So huge opportunity.
Thank you. What are Blackbird's major threats?
Well, we never rest on our laurels. We always make sure that we're pushing our tool sets, our infrastructure and our codec forward. There are no major threats on the horizon at this stage, but that's not to say that we don't push our entire platform forward at all times to make sure that we maintain our competitive advantage.
Thank you very much. There are a number of questions around sales. So perhaps if I just concise them into this question here. Despite some notable recent wins, for which congratulations, sales seem to be running at a bit of a trickle. Can you give a little bit more clarity around that?
Yeah, and I hope I covered that a little bit on the slides. We talked about directs and OEMs. The big names that this person's referring to are indeed our direct deals, where we imagine the majority, or where we're planning for the majority of our revenues to come from, is from the OEM deals, which probably not so much household names, but they will indeed contract with those end parties over the next year or so. That's really the focus.
Okay, thank you very much. Question here around product development and R&D. What are your major product development / R&D milestones over the next 12 to 24 months?
Well, maybe I should take this. This is Stephen Streeter here. I might take this one. I mean, it's a big question, so I won't go into much detail. Product roadmap, we are adding a new product, which we have a variation of, but this will be a much more focused version called Ascent, which is a new editor for a wider audience. And obviously, we're continuously upgrading our existing high-end sophisticated editor. In R&D, the first focus, because of the number of sales, the increase in the sales and revenue that you've seen, we expect that to continue, is to provide the infrastructure to scale the volume of users so that we can support these bigger clients. And that is another continuous process. We've done quite a big increase already this year. On the technology side, the codec we use, BLACKBIRD 9, which serves its job very well, but we're due an upgrade for the codec, and the new version will be BLACKBIRD 10, and that's aimed at 1080p as the standard resolution, which will open up the uses and give lots more flexibility for our OEMs and how they sell the products. And then that brings me to the real meat of where the revenue is going to come from, is OEM integrations. These OEMs are just orders of magnitude bigger than BLACKBIRD can be as a small UK company. And so mostly we have what they need, which is why they're signing up. But there are things we can do always in development to make their job easier as resellers. The biggest one recently was the move to JavaScript, which means that they can sell to big broadcasters and big clients a product that you can just run out of the box. Just works. It just works. That's how it feels now to these clients, because they can run it in any browser on any computer anywhere in the world. And so that move, although it looks similar to the user when they're using it, from the point of view of actually commercializing it is a big difference. And we're moving towards replicable and standardized products for the OEMs, so that they can, instead of having, as we used to a few years ago, have bespoke changes for every client, which you run a client, but then you have to do the work for every client. We're moving much more towards completely standardized products, which can scale indefinitely with a big sales team. And I think it was touched on in the slides. The next stage after the OEM integrations is to move into public cloud, do integrations with public cloud. We already have working prototypes for GCP, Google Cloud, and AWS versions. So all our infrastructure for the cloud, we can spin up public cloud versions of those. And as we move forward, that will allow essentially unlimited scale for the sort of deals that the OEMs could be doing in the future.
Thank you. And I guess the final question, of course, any ones that were pre-submitted, as I said earlier, the company will also review. But the final question here is I went to Blackbird Video hoping to remind myself of who our major customers, but there was little information there aimed at shareholders. Is this information available?
Well, I'm glad you asked that, Mark. So on this slide, there's a host of logos that you can see. We also have quite a number of case studies on the site, and under latest news, you'll find a lot of the more recent deals that we brought on. There's also been a refreshed IR page with broker notes, videos of myself, our presentations, etc. on there as well. So I'm very interested to know from the investors whether there's anything there that they feel would like more of. But yeah, please do check it out. There's quite a lot of information on the blackbird.video site, and we'll definitely take hints as to what else to add. But some of the key things that this person's looking for might well be under the case studies and latest news.
Thank you very much. Well, as I say, that concludes the pre-submitted questions. Of course, investors have had the ability to type questions throughout your presentation. Perhaps there might be an overlap of some of those and some of the pre-submitted. But if I could hand back to you guys, we've got a bit of time, and then obviously I know you want feedback from investors. But if I could ask you to perhaps read out the questions and then perhaps give your responses where it's appropriate to do so.
Shall I start, Ian? The first question was really, which month are you planning for the monthly cash burn to cease? We're not actually giving out, cash flow or revenue forecasts at this stage. It's quite unpredictable. As we bring OEMs on board and, we get an idea of their run rates, then obviously we'll have a much better idea in terms of when we'll be able to hit cash break even. Just to reiterate, as I mentioned in the presentation, we're very confident we're going to hit cash break even with our existing resources.
Great.
And similar question really on the revenue side. Someone's asking for the revenue projections for 2020 and 2021. We don't give out forecasts. I've given you an idea in terms of the 2020 revenue. It's going to be at least 1.45 million, which is up 35% year on year, but we have several months in which to grow that further. And we've secured 750,000 of revenue for 2021 already.
Thanks, Steve. There's a question from Nathan, who's asked about the OEM position and how does that look in relation to some of our competitors. Well, we don't really know how it looks in terms of our competitors because we don't look at they're more a product company and we're going to be more a technology company. How it looks for us is that we envisage probably a 75% share of our revenue will come from OEM, and maybe even north of that. So that just gives you an idea. How it relates to Avid or Adobe's not particularly relevant to us at this stage. That's how we're going to progress. There's a question from Colin. Is your creation of a public cloud prototype in response to a direct request from and in collaboration with one or more of the 3 public cloud operators, or is it speculative? No, we have a very close relationship with these guys. As I mentioned, we've already done joint presentations and webinars together with Azure and AWS this year. John has come across from Google Cloud onto our board, so we have a very close link into there as well. This is absolutely done in discussions with the 3 of them. Yes.
Got a question here from Hugo, who asked actually what was the total cost of trade show attendance in 2019? So with travel and the cost of exhibiting and everything, it was probably a low 6-figure figure. Okay.
How quickly can you ramp up revenue from here, and what sort of revenue base do you think is possible to go after? Well, we've given you an idea of the size of the market. Obviously, it's huge, and there's not many players in it. So, a 20% of our own market would be a considerably hundreds of millions of type scenario. Probably won't go too much detail there. There's you're looking between $1 billion and $17 billion of the entire market. It's a big number.
There's a question here in terms of, are there any constraints on Blackbird's partnering with competing OEMs? The answer to that is no. We do non-exclusive deals at the moment, and it would have to be a very, very attractive deal for us to do exclusivity. But we are in an enviable position in that a lot of people are wanting to talk to us at the moment. So we do a full analysis before we bring on board any of these partners in terms of the size of the opportunity, the ease of integration, and how incentivized, as Ian mentioned earlier, they are to sell Blackbird.
Okay, good. A question about the impact of revenues on the decimation of live sports. What was it? Well, it's difficult to say. We're in growth. We're in business development mode and on a sharp upward trajectory. So it's difficult to say how many new customers we didn't win because of live sport ceasing. But I think it's great that we grew by 49% even with that happening, and that we're a real part of getting back to play with people like the NHL and others.
So I take this one as a little bit tongue-in-cheek, actually, but I'll read it out. Bird has made great progress in the last 20 years. Do you foresee that 20 years from now, Bird will be profitable on an annual basis? As I said to you, with our existing resources and our core strategy, we think we're very confident that we're in a position to break even.
Great, thanks. Okay, so we look at some of the other deals. Maybe one or two there for you, Stephen, if you're.
Yeah, just unmute my mic. Well, there's quite a few things. I mean, R&D has an impact on quite a few of these. Maybe I'll just start with this one at the end. Is your public cloud prototype an entry into the B2B2C market? And so the thing about B2B2C is the cost of acquiring the consumers. So if we were to exploit our technology in that area, we would want a customer who already has those consumers. So I think anyone with that many consumers will have very large scale and would need the public cloud infrastructure. So I think that is really, from a development point of view, it opens up this possibility, and that's what the job of R&D is. And we have had some interest generally in having a much bigger audience, but we'll do one step at a time. The public cloud allows us to scale, and before we get to the B2B2C market, it allows us to scale indefinitely in the OEM market as well. And there was a question about, is there a limit to how many sales the OEMs can make? And the answer is, with public cloud, we can scale as much as we want.
There's a question saying, are Vimond.io credible competition? I mean, we respect and think of all our competition as being credible, make sure we don't rest on our laurels. We do know that one of our new customers actually road tested Vimond and Blackbird side by side and became our customer. I think that it's important to note that nobody has what we have in terms of the Blackbird codec, and so if you're an end user and you're using the two side by side, you're just not going to get the same responsiveness and frame accurate level of responsiveness that you would do with Blackbird. Do you envisage more OEM deals in this calendar year? Yes, we do. I think that's key. I think over the next 12 months, you'll see quite a number of new OEM deals. It's really the focus of our attention right now. All right, do you see any more there that we should?
They're all of similar themes.
Yeah.
I think you have probably taken most of those, as you say, that there are a number similar in nature. So perhaps we can review those post the meeting, and if we have missed any, of course, we'll put responses if it's appropriate. Ian, perhaps I could just hand back to you just very briefly, maybe just to wrap up, and then I will redirect investors to provide you feedback.
Sure. Thanks, Mark. Well, just to wrap up, actually, I mean, it's been a very unusual period for everybody. I know that, and through the fact that most of our new market, our new customers, were not able to operate within this time, was unsettling. But we managed to come through it. We managed to grow the business considerably, and bringing a company like Tata Communications on as a new customer, where we're seamlessly integrated into the tool that is already linked into 400 customers globally. When you join that up with what Stephen said about the fact we're at 95% gross margin business, it is really a very exciting time. And Tata Communications is not the end of the story. It is really just the beginning of the story. And so, yeah, just leave it at that. And thank you very much for coming today. I think it's going to be an exciting rest of the year.
Thank you very much indeed. And thank you to Steve and Stephen also for updating investors today as part of your Investor Roadshow. Could I ask investors not to close the session, as you'll now be automatically redirected for the opportunity to provide your feedback to the company. If you access this meeting from our website, the feedback page will appear automatically. And if you accessed it from the link sent to you by email, you'll be asked to log in to submit your feedback. That will take a couple of minutes or so just to pop up. On behalf of BLACKBIRD PLC, I'd like to thank you for attending today's presentation. That now concludes today's session. Thank you once again. Good afternoon.